Hello everyone, I'm Dr. Stock, and in this video we're taking a look at GDP and also PCE and consumer sentiment coming up tomorrow and what that means for the markets. So stick around for this video. I think that you'll like all the information that I have in here, including this offer that I have for you from Moomoo. This does expire tomorrow, so make sure that you click the link down in the description. By using my link, you get up to 17 free stocks. Not only are you supporting yourself with this, but it also does support the things that I do here on this channel and my family as well. So all you got to do after you sign up is deposit $100 or more, you get 7 free stocks. For $1,000 or more, you get 17 free stocks. Each of those includes 2 AI draws, and the other remaining stocks are valued up to $2,000 a piece. So check out that offer down in the description. Also, if you like the commentary that I have here and you would like to hear more of it, check out the link down in the description for the Patreon. With that said, I'm Dr. Stock, Doctor of Education. Let's get right into the content. All right, so we got the GDP report, and it was the third revision. That's what the third means here. So for the fourth quarter of 2022, it was 2.9, then 2.7, now down to 2.6 is the final revision that we get for Q4 2022. Too many thirds and fourths and all that kind of stuff. In any case, so we have Q1. The advanced estimate for that comes out in about a month's time. I believe the date that sticks in my mind is April the 27th. I can always check that out. You can always look it up as well, but it is the end of April that we get that coming out. And on top of that, we also have Q1 earnings piling up. So we most definitely want to be watching for that. So what we want to see is if these kind of numbers, this 2.6% that we have, is something that holds out for us. And let me see, we can see that some of the things that we had, consumer spending was part of that. Also inventory investment, and then it says partially offset by a decrease in housing investment. And so that's going to be an interesting area for us as we get into Q1 and we see what's in the advanced estimate for that one. Now, tomorrow at 8:30 a.m., we get personal income and outlays. And you can see for January 2023, personal income went up by 0.6% on a month-over-month basis. And that was the hottest read that we got since October. And so personal income, we do want to see that moving up because that's better for the consumers. That can certainly help out the GDP. We also want to be looking at disposable income, which on the chained dollar basis, up 1.4, and you can see comparatively what that looks like across here as well. So increases in disposable income mean that people have more money to spend on whatever they decide to spend it on. It's not spent on cost of living, for example. They can even attribute it to savings if they want to, and that reminds me of personal savings even got revised up from I think 3.9 to 4.0. So people have a higher savings rate for more of the disposable income, which could be a good thing in terms of staving off any sort of recession or seeing strength through any sort of recession that we might see during 2023. Now, we know inflation's been pretty hot, and right here's one of those measures, 0.6% for PCE, core of which, and again, this is month-over-month basis. Let me move up a little bit just in case my image is blocking it. So whether it was core or whether it was PCE for everything, 0.6% is a very high number that annualizes out to 7.2%. For the year, and that's well above what we want to see. That's over triple what we want to see coming back to that 2% basis. So about 3.5 times too high to see that come in. We want 0.1s, 0.2s, maybe the occasional 0.3s, but definitely not 0.6. So we want to come back to these more moderated values that we were seeing previously leading up to that value for January, and a lot of people are blaming the seasonally adjusted averages, and that can play a big part in this. And so what does that mean for moderating for February? Oh, by the way, I just do want to mention real quick on a year-over-year basis. So for January, 5.4 and 4.7. So when we look at the most recent action, this is January's reports using the St. Louis Fed that we have here, and you can see the 0.6% that we got for core, and it rounds. These are percentage values that we're looking at. 0.6% for core, and what rounds to 0.6%. I'm sorry, they both round to 0.6%. The top one, the blue one, is for everything, and then PCE core is still rounding to that 0.6%. So what we are likely to see for February is what we saw with the CPI, that there might be just some slight softening. Maybe this pulls back where they both round to about 0.5. That's what I expect to see for PCE tomorrow. And I think the markets, if they see that moderation, then the rally can certainly continue from where it's at right now. We are sitting right at the cusp of brand new highs, relatively speaking, in the Nasdaq. We broke up above 4,000 in the S&P, and the bull market has been said to officially have started. So being that we're up from 20% from the December lows. So we're going to have to see. Bull market, fine. Bull run, there's too much doubt in my mind for 2023 to say that the rest of 2023 is going to be as positive a story as we see right now. Now, I do think that we have some room to run on that, and I'll get to the markets in just a moment. So I'm not saying that we're done running upward, because I think tomorrow could give us that opportunity. Now, another thing that we had to consider for tomorrow is consumer sentiment, and that one is here for us. So for consumer sentiment, what we got for the initial read for consumer sentiment was a 63.4, and that was up from last March at 59.4. However, it was down from February at 67. And then you can see also current economic conditions also down a little bit from the previous March and down from February. Not great for us. And they have those percent changes over here for us as well in this last column. And then index of consumer expectations. This one here, 61.4, up from 54.3 a year ago, but still dropping from February. So when we look at the details of what's mentioned in here, you get the failure of Silicon Bank, and it says about 85% of the interviews were done prior to that happening. Now, with the rest of the interviews having taken place, that could be factored in. However, we don't know how much has stabilized since that point in time by the time those interviews actually were conducted, because right now the market is saying, hey, we're in good shape. The Fed's going to backstop us just in case anything else is happening. And it looks at it for right now that a lot of the banking fears have subsided, and that's allowing us to have a little bit more levity in the markets. So let me move on from there for you. So there we go. Financial turmoil, all that. Year ahead inflation receded from 4.1 down to 3.8. So it's good to see that subside a little bit. And we'll also see, following the CPI and PPI that we got, maybe that does tick back up a little bit, and that could be just slight downward pressure, although I don't think this one moves us. I think really seeing April's is going to be sort of okay. May is going to be the big one, because by then we actually get some pretty big corporate earnings that happen by that time, including the big banks, and that's really going to tell us a lot differently. And we're also going to have other inflation reports happening. So May consumer sentiment, I think, is going to be the next big one that we have coming out. And we'll see. April could show us a decent change. I don't mean to write off April. April could also go positive, could push up the markets from where they're at now. I think it might tell a slightly different story from what we have for March, although we'll happen to see. So April positively pushing up for us from consumer sentiment on the markets, a little bit of upward pressure, and then May being a little bit of downward pressure from there. Here we're looking at the SPY as we look at the markets, and I'll zoom in, and I would like to humbly say that I was wrong with my market sentiment this week being bearish. So if we actually go to Friday and I click here and drag up to there, this is the Moo app that I was talking about. By the way, you can see in the S&P, we're up about 2%. We've firmly broken that 400 level, or 400 in the SPY, 4,000 level in the S&P, and closing up above that is a very strong thing. Now, the bulls and the bears are fighting over this territory right around that 400 mark. So we'll see if that's something that we can continue to push onward with. So let me zoom out so we're not looking so close up now. And I'm also going to delete off that drawing so it's not in our way. And we have some resistance that we start to hit right around 406. So that's about 0.75% up. However, if PCE comes in low for us tomorrow, that could be a very positive thing. We could blow right through this minor area resistance that we get. So like I said, about 0.75, I think easy if we can continue the momentum. And as per the RSI, we still have that sort of momentum going for us. Now, the volume isn't all that great yet, but tomorrow's the last day of the quarter, and we could see some rotations out of the large funds, the hedge funds and whatnot, that would allow us to continue to experience that rally. Now, if we come in ultra low, that is something that we can start flirting with that 412. Now, that's about $9 up that we have, well, 8 to 9 from where it's at right now. And that's a strong 2% for us that we would have in the markets, and that would come from a very good reading. I'm talking like 0.3, 0.4% month over month coming out in PCE, and consumer sentiment having a minor role to play in that, although I think a lot of it, especially if it still deals with financial woes in the banking sector, I think a lot of that's going to be disregarded by the market at this point in time, and I don't think that inflation expectations and consumer sentiment is going to change much from what they were. So we're going to have to watch what happens. I think that tomorrow stands a chance of being another red day, that we could possibly break through this resistance or at least test it. 0.75, I think would be a good minimum, going up to that 413 number, 412 number, somewhere around in there, that 2% up would be the strongest case that I would say to close the week. And that would be off of absolutely incredible PCE numbers. And based on what we got for the CPI, I don't anticipate that they're going to come in that great. So I think 0.5, 0.75 would be a little bit more likely for the S&P, saying that we have maybe a 0.5% month over month for the PCE measure when it comes out, downward from there. So if we do happen to fall from here, we have room for about 1% down from where we're at right now. Now, mind you, I think that the S&P is going to close up above 4,000. So I think holding it about the 400 line would be about right. So 0.75 down, maybe down as much as 1%. I don't anticipate any huge negative news for us tomorrow. Let's look at the Qs. QQQ. And this one's an even better looking chart. Now, check this out. We broke this previous high solidly this time. Unlike these other times where we peekabooed over it, we both opened and closed up above the previous high that we got. And we have very, very minor resistance right about the 320 level. So if we get a strong day in the S&P, strong day in the NASDAQ, we see a further rotation into tech and the growth plays. That's something that could push us up even further to 323 maybe. So now we're talking, let me see, that's 8. So over 2%. That'd be assuming, again, the same assumptions that we had for the S&P. We'll also assume for the NASDAQ 100 that the Qs track here. And I think that we'll see what that has to say for us. And if we keep getting strong economic news coming out, then I think that we could retest that high that we see back here in the near future. Now, I will say, well, let me get to support here, 305 down from the 315. I actually think that we'd more sooner sit on the 309 level. So we have room at, or maybe even 312. So I'd say 1 to 2% down would be my worst case scenarios that I have for the Qs coming up to close out the week tomorrow. And that's a PCE. If it comes in even with January, that's not going to be great for us. If it comes in above what we got for January at 0.6% month over month, that's going to be horrendous for us. So we definitely don't want to see it come in hotter than January did. We do want to see it continue to moderate, to see the markets continue to rally up from here. So GDP numbers didn't come in too bad. Watching for Q1 GDP is really going to be a telling story for us, especially if it comes in strong and especially if the end of 2023 comes in weak. That's a really strange mix because that means that there has to be some contraction that happens in between. I have that spreadsheet shared over at my Patreon. And if you guys like my commentary, like to hear more of it, that link is down in the description. Go ahead, click sign up, be a member of my Patreon community and talk with me and my other community members in the private Discord. We'd love to have you. PCE tomorrow. Keep your fingers crossed that it comes in not the same as January. A little bit lower is all it has to be, and we're in really good shape. A lot lower, and we're in really great shape. Given what the CPI said and the fact that the PCE and the CPI somewhat move together, I don't think that we're going to get incredibly low numbers. I think 0.5 is likely for both items. Not any lower than 0.4 would I expect. I'd be very, very surprised to see it come in lower. But if it does, if either one did, that'd be really great news for us. So it's definitely something to watch out for. And then consumer sentiment, I don't know that there's a lot of weight to put on that. At this point in time, I think April will be a more telling case. I think May is going to be really big for consumer sentiment to watch and see what comes out for that. All right, guys, I got to wrap this thing up. Thank you very much for watching this. I told you about the Patreon. We'd love to have you as a member of the community. Go ahead and click sign up and get access to my Patreon exclusives, including my Tesla earnings projection. I nearly have it ready. I'll be posting that either today or tomorrow over at the Patreon, and I will update it again as soon as we get the actual delivery numbers coming out on Sunday for Tesla. So please be on the lookout for that. I'll make a video, I'll share the spreadsheet, all that kind of stuff over at the Patreon. Also, don't forget about your free stocks brought to you by Moomoo. Down in the description, click the link, sign up, deposit your cash, get your free stocks. It does expire tomorrow, so take advantage of that offer while it's still around. Thank you guys for watching this video. Click the like button if you like what I had to say. Click the subscribe button to see more of my content and ring that notification bell to be notified anytime that it comes out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.